Hello and welcome to Weekend Investing Daily Bytes. We want to wish you all a very happy Diwali, and we are also now starting a new offer code of Diwali 25 for the next 3 days, October 22 to October 24, for you to start your journey in the market. You can choose any strategy you like. So this is valid for Saturday, Sunday and Monday. Today's episode is about the curious case of TENCENT Holdings. We'll take a case study of this large entertainment conglomerate, global conglomerate, and we'll first look at the market. So PSU banks continued the run, up 1.85%. PSU banks have been running very hard. Last 1 week, the PSU banking space has gained 11%. That's really big move for 1 week. Private banks were also doing quite well, with Axis Bank taking the lead and up almost 9%. Nifty, however, giving up all the initial hours gain and closing at 0.07%, and most other sectors taking some profit booking towards this coming weekend. And of course, the next week also, due to Diwali, the trading sessions are going to be only 3. With Monday only having the Muhurat session for 1 hour, Tuesday a full session, and then a Wednesday again a holiday. So only 3 full sessions are there in the next week, and it is expected that the market will remain a bit low volume and dull till then. While Nifty closed flat on the index, the internals of the market were not so strong. Nifty Next 50 gave up 1.3%. Mid and small cap index gave up 0.5%, and small cap index also gave up 0.4%. CNX 500 was down 0.21%. So Nifty was basically held up by a few large caps, and we'll see those. Within the weekend investing strategies also, there were losses in line with these indices. So MI NNF 10 hurting the most, along with NNF 10 and along with Nifty Next 50 at minus 1.2%, and MI 25, MI 35, which have small cap flavor, down about 1%, and so on and so forth. There were only MI LTC Next 200 which was up at 0.15%, but other than that, there was no remarkable movement in any of these strategies. In terms of the heat map for the day, you can see that Hindustan Levers in the FMCG pack, ITC, despite a very good result, there was some profit booking on it at minus 1%. Reliance also down minus 1%. ONGC was up 1.5%. But the main action, as you can see, was in the banking space, with Axis Bank plus 9%, Kotak Bank plus 2%, ICICI Bank plus 2%, and SBI Life also plus 1.9%. IT stocks were flat or dull, and Asian Paints continued some fall from yesterday after the results, again minus 1.5% down. L&T also down 1.4%, NTPC down 1.1%, Adani Ports also down 2.2%. So pretty much a mixed bag, along with some FMCG and some banking doing well. Cement stocks and steel stocks were also not very buoyant. Top gainers in the CNX 500 universe: Finolex Cables up 10%, KPIT Tech and Axis Bank along with LG Equipment up 9% each. Vijaya Diagnostics up 6%, so sporadic gains. Delivery, the recent IPO, lost another 18%. So after the management came out and guided flattish rest of the year, in 2 days this has lost somewhere close to 35-40% market cap, and a lot of people are stuck in it now, and this is now at its all-time lows, and we don't know when it starts to build back. So having an exit plan at some point or the other does make a lot of sense, because you never know what will happen. And the same case we can say in Laurus Labs. Decent results, minus 7%, closed at 486. So since last 1 year, I think we had this in our momentum portfolios, and we rode from 80, 90 levels till about 500 odd levels and got out about a year back. And since then it has been oscillating between 450 and 650. So having a clear run and a exit and then utilizing that money elsewhere is also a great strategy, and not having to go through this pain of the stock going nowhere and the future not being certain. Transport Corporation of India also dropped 7%, Route Mobile down 6%, and Home First down 6%. So TENCENT Holdings is what we are looking at today. The Chinese multinational technology and entertainment conglomerate holding company headquartered in Shenzhen, one of the highest grossing multimedia companies in the world based on revenue. So TENCENT is a very widely followed company both in Hong Kong market as well as in the US markets, where its ADR is listed. So TENCENT chart, the PE ratio chart is presented here, and you can see in the last 5 years the PE ratio went up to a high of 60, then came down to about 20, then rose again to about 45, and now is down at 10. So the PE ratio itself has been all over the place for this stock. And see the price movement. Now when the PE ratio was very high, that was 2018. So we were here at 60 price earnings, and then the price earnings dropped to about 25, 30 in this range of 2019. So we were here at 30. And then in 2021, while this high was made, the PE ratios were about 40, and now they are at about 10. So very, very confusing picture when you look at it from price earnings ratio basis. Extremely confusing relationship between how the earning is performing, the earnings growth or the fall is performing versus the price. These are two variables that are somewhat in a world of their own. So earnings is doing its own thing, the price is doing its own thing, and the combination ratio of these is actually very confusing. So like we a lot of times take decisions, or at least have PE as our major decision point, reason why we are buying a stock. There may be many others, but PE can be very, very misleading. In fact, stocks which are gaining price earnings, so PE earning growth is something that is probably more reliable, but I am not a student of that particular part of investing, so I will not say much about it. But what I can say is that when PE contraction happens, like in this case, PE contracted from 60 to 10, and possibly there was some earning contraction also. So that is something that will really throw off all your bets. So we were 60 here, we were 20 here, we were 40 here, and we are 10 here now. I mean, how do you even start to make sense of it? So a better way could be to maybe not rely on earnings as much, but rely on the mass psychology of the price, as we say, bhav bhagwan che. So if maybe if you are following momentum, you may have entered here, maybe exited here, then maybe entered here, maybe exited here. You may not have made a lot of money, but at least you would have not lost 6 years of your life without any gains. So this is sort of something that I wanted to point out that the best names, the best quality names, the biggest investors bullish on it, you never know what happens. And the same can be seen for many other US stocks, many other Hong Kong stocks. Baba is another example that is there. So locally, one more example, Motilal Oswal Finance came out with some results, decent results today. But the stock moved from some 60 levels to 1500 levels. Maybe we should have gone to 2013 here, but nevertheless, it was 60 in 2013 somewhere, and then it was flattish around 300 and went again 5 times higher in this 16 to 18 period. So when stocks move this kind of 5x type of moves, then they take a long time to digest that move. Just like when you have a very large meal, it will take your stomach very long period to digest it and make you very uncomfortable in that process. The same thing is happening here. The stock has moved from 300 to 1500, actually 60 to 1500 in 5 years. And then, it is just digesting that move. So current earnings are not so relevant right now in this digestion process. It's like, the stomach is digesting something, but I am having something on to top it. So the stomach is not registering what is coming fresh in terms of current items to digest. It is still digesting, that past huge meal that it had. So something that one needs to see, that if you got a clean run here, and maybe you made 3x or 4x in this run, you could have gotten out somewhere after this first fall and not have had this 4 years of pain, and use your money elsewhere where some better price action is there. So unless you are really determined to get your gains from that stock only, and you want to keep that stock till your last breath, only then you can really hold on. Just look at the fall. 1500 to nearly 400 or something. So say if 70% type of drawdown, why do you want to upset your stomach and your gut, with so much of drawdown? So this was another example. Of course, there are more examples if for more daredevil type of people who love to buy falling knives. Policy Bazaar is like one of them. 75% drawdown from the peak, listed with a huge IPO fanfare, just because everybody loves to buy policies from Policy Bazaar does not mean that Policy Bazaar will be a great stock to have in your portfolio. So this whole connection of that I love the brand or I love the product and hence I should make money from it, at least for me, that is a total bogus sort of correlation. I love, LIC insurance company. It has been the most stable insurance company India has ever seen, the most with the longest history, and hence I should buy LIC. That is no reason actually. Every stock has a bad price and every stock can have a good price. So and every good company can have a bad price and every bad company can have a good price. This is something that you need to understand, that the best of companies can be priced badly and the worst of companies can be priced well. As you would have seen, even the companies that we would never sort of put your hands into, the earlier ones, maybe Yes Bank, Suzlon, India Bull, those kind of companies, after their 80-90% fall, even those companies at some point have value for some period and then they become useless again. So again, just because some stock has a very catchy brand or something and it is widely followed or people are flocking towards it, makes no reason. And also in the IPO market, wait for some time, especially if you are going to be a medium to long term investor. Wait for some time for some stock to stabilize somewhere. And if within a few sessions, if you are seeing that it is hitting all time low, let's say here within 15-20 sessions it hit an all-time low. When a stock hits an all-time low, that is a signal to me that please stay away until some price formation is telling you to go ahead and buy it again. And you can see that it is making lower highs since then, lower lows, lower highs, lower low, lower high, lower low, lower high, lower, just continues to do that. It has not even been able to make one decent higher high and a higher low to confirm the change of trend. So this continues in so many stocks, and one can just use these simple mechanisms to avoid big losses in these stocks. Here in another IPO, Delivery, as I mentioned in the losers list, 45% down from peak. One statement: next part of the year may not be so big in growth, and the investors want out. So markets also have become extremely fast in reacting to such news. 560-70 2 days back, and today it hit 380. So huge loss of market cap here. And again, here you saw that although it did make a new all-time high, so that would have caused even a lot of momentum investors to come in, but this fall here probably would have gotten them out, and they would have been sitting out. So some loss taken here if you had traded it on momentum, but would have saved you from this for sure. So again, having a strategy, very, very important, whether momentum or not, whether anything else. And just see, I mean, it was creating this floor here, 4 or 5 times this range it broke, it was holding, and then it broke here, and then it just collapsed after that. So this candle actually was a sort of a precursor. Sometimes it's a false signal also, but it did give you some indications here. So this is all I had for this session. I wish you all a very, very happy Diwali once again. We will probably meet after Diwali, but have a safe Diwali, and wish you a very prosperous next 1 year. Please use that offer code Diwali25 if you like, and do share this with all your friends and family. Bye.